Welcome. I am the Empowerment Auntie, and I am here to help you to reach your career, money, and relationship goals. Today, we are going to be talking about personal finance. And in the personal finance, we will be talking about quite a few topics. Saving money, because Forbes Advisor said that in 2024, only 25% of Americans had $1,000 or more saved. And that is something that we want to change. So I am here to help you to save money and to maximize your financial life. The first thing that you need to do when you want to maximize your financial life is to know where your money is going. And it helps to have a budget. A budget, some people think is a bad word, but a budget is just a plan for how you expect to spend your money. And a common plan is the 50-30-20 plan. And basically, what that is you take your take home income, and that is considered 100%. You take 50% of that, and that is used for your necessities. So that would be like your housing, your transportation, your food, your utilities, your tithes. And then 30% is for your wants. So those nice things that you want, that would be the 30%. And 20% is your savings. You should not be saving less than 20% of your income if at all possible. And if you're saving less than that, try to work your way up to at least 20%. And one way you can do that is to call every year to try to negotiate different plans or packages that will reduce your costs on your cell phone, your cable, your security alarm, your internet, your credit card interest rates. A lot of times those will be adjusted for you if you only ask, if you are a good customer. So make it a habit, put it on your calendar to ask once a year for them to lower your rates. We are going to talk about credit scores and credit reports as well. Um, there are three major credit bureaus: TransUnion, Equifax, and Experian. And they are the repositories of credit information that businesses use to determine whether or not you are credit worthy. And the credit report is the file of personal information that they have on you. As part of that file, you get a credit score. And the main credit scoring agency is FICO, and they have the score that businesses use to determine your credit scores. The credit scores for FICO range from a low of 300 to a high of 850. And the breakdown is this: a poor is 300 to 579, fair is 580 to 669, good is 670 to 739, very good 740 to 799, and exceptional 800 to 850. And then next to that, you see the percentages of people who have each score. Now, when it comes to your credit reports, the credit bureaus have similar information, but it may not be the exact same. Each bureau has its own file on you. You are entitled to get a copy of that credit report for free every year from all three of the major credit bureaus. And to do that, you go to www.annualcreditreport.com. And that is the website that was initiated by the federal government so that you can have a secure site to request your credit reports. And you can get one per year. So I recommend staggering them and getting one every 4 months so you can get a running view of what your credit profile is on your various credit reports. So maybe in January, you might get it through Experian. And then in May, you might get it through TransUnion. And then in September, you get it through Equifax. And then you start over again the next year. And that way you're getting one of each free every year through that website. there are different factors that affect your credit score. Payment history is a big part. The length of your credit history is a significant part. Your credit utilization ratio, which is how much of your credit you are using. So if you have a $1,000 credit limit, for an example, if you've used all 1,000, that is maxing out your credit, available credit. That's a 100% utilization ratio. If you have used only 300 of that 1,000, then you have a 30% credit ratio. And the companies like to see a credit utilization ratio of 30% or below. Whether your credit is new or you have new credit also factors into your credit score. And the credit mix. They like to see a variety of different types of credits, maybe a credit card and a mortgage and a car payment or something like that, to make sure that you are a well-rounded person that is credit worthy in all different realms. But the payment history is the most important. You can dispute any negative items on your credit report because the law, the FDCPA, Fair Debt Collection Practices Act, does say that everything on your credit report has to be 100% accurate. If it is not, you can request that it be removed and they will have to remove it. So if they cannot validate that it is correct, they have to remove it. If it's a legitimate debt, like say you bought a car and it's on your credit report, but they do something wrong and it's not on your credit report correctly, you can have it removed, but you still have to pay for the car that you're driving. Just because you have it removed from your credit report does not mean that you are not responsible for it.